So something to definitely keep in mind is, as a finance professional, you have the greatest position to really drive influence in the business. Now, in today's topic, we're going to talk about, that as a huge thing, because something that, working through the COVID pandemic has really taught us is that the finance department is more essential to the success of any business more than we ever realized. And, as you start to think about that, people are, I have for years wondered, how do I make an impact in the finance department? Now, of course, there have been some people who haven't really thought about making an impact. Some people have been happy playing in the background and really just working through their somewhat mundane task or their routine task, and they've been happy playing in the background. But in the environment that we're living in today, it's almost a requirement that as a finance professional that you have to step up to become the number 2 or the number 3 in the company. And that requires you to really start to develop that skill of partnering with your counterparts, because they are really going to rely on you more and more heavily as they're trying to navigate different decisions. And so for the finance and accounting profession as a whole, I mean, there is a massive mindset shift that we're going through, because, before, we kind of sat in the background, and maybe when an audit came up or maybe when a tax question popped up, we jumped up and or people came to us to ask us the question. But now that people are realizing that finance is so intertwined with the rest of the business, people are having to really step up and realize, hey, I need my finance help like on a regular basis. Like, there's no way I'm going to be able to make the best decisions for the business if I don't have my finance team's help. And that's something that a lot of finance professionals are starting to realize. Unfortunately, there have been some that are still kind of lagging in that transition, where they still want the situation where, hey, the CEO, the COO, the sales team, they go do their thing, and I'll just be sitting back here waiting for the transactions to come through, and I'll be a little bit more reactive. But the truth of the matter is that that's not what the operations team, it's not what the CEO, that's not what the sales team, the marketing team, the engineering team, that's not what they want. It's like, I guess, you can say in the past, we've lived in this world where all the other parts of the business, they just wanted to do their job and they wanted finance to stay out of the way. Now, what they're realizing is there's no way that I'm going to be able to do my job effectively without the insight that finance can provide. And what has brought that to the forefront even more is as we worked through 2020 and we really saw the drastic impact that COVID-19 has on the way we do business, the way we think about business. I mean, what that really showed us was, you know what? There are so many financial implications tied to your decisions, to where we really need to figure out, how do we partner with the finance team, because we need the finance team's help. And throughout 2020, there was this, I guess you say when 2020, came on, people had high hopes, great outlook for the year. January, people started hearing about, this COVID-19 virus. And then kind of by February, it started feeling a little closer to home. And then by March, definitely where we really started seeing the impacts, or I guess you started seeing some of the ripple effects of what this virus actually meant for a lot of people. And as we started to see that, businesses started to respond, and there was this phenomenal sense of panic. And to be honest with you, there are some businesses that are still working through some of the residual of that panic. And so it created a huge gap and a huge opportunity. And so one of the very big things that we can do as finance professionals is figure out how to partner with the non-finance teams, how to partner with them through a time of panic. And not only just through a time of panic, of also leveraging that to move into partnering more with them on an ongoing basis, but definitely now in a time of panic. And so for those of you that don't know me, my name is Terrell Turner. I'm a CPA. I am the managing partner of the TL Turner Group, a accounting and a finance firm that focuses on bookkeeping and CFO services for law firms, marketing agencies, insurance agencies, restaurants, bakeries, and bars. What I tell people is, from a bookkeeping standpoint, we are great at serving those 6 industries where we're good at doing other stuff and we can do it. But what we've decided on is we've decided to focus on what we are great at, because that is where we add the most value to our clients, of helping them think through things, figure things out there. And then we also offer CFO services. And what we are really great at when it comes down to CFO services are forecasting and modeling, really helping people wrap their mind around, hey, how is my business going to look based on these factors? Like, hey, if we do this, or hey, if this is the situation, what does that look like? And really helping them analyze their business model to really bring it down to say, hey, based on your business model, if these things happen, or if we approach it this way, here's what the likely outcome is. And then we also do a lot with, simplifying reporting and really working with understanding, like I said, the implications of their accounting department or accounting function, and providing some guidance, some context there of how do you roll it up. Because one of the things that we definitely have to do as accounting and finance professionals is we can't get weighted down by, I guess you would say, slower processes in the accounting function that stops us from being able to effectively, and notice I said effectively, being able to effectively get information and insightful numbers and insights to our non-finance team so they can make decisions. And the decisions that need to be made, they're happening much faster. And then also, outside of the TL Turner Group, I host the Business Talk Library, the founder of the Business Talk Library, where we create tons of content around different finance and accounting topics. A lot of it is free. We have we've recorded probably over 500 different videos for various audiences that can all be found on our website and on YouTube and on podcasts. And so we create a lot of content to really help business owners, because we feel it. Sometimes a business owner only needs a little bit of direction. They don't necessarily need to hire us to come in to do a project or to work on their business or to be their bookkeeper. They just need a little bit of insight and direction on a topic. So we create a lot of content there. We also do some paid course content that we create as well for different outlets. So we do a lot of great things of really keeping a pulse on what's going on how do we really help businesses, and how do we help, business owners and business leaders. And so that's what we specialize in. And so I want to go back to our topic of partnering through panic, because one of the things that we have to ask ourselves is, okay, as we're partnering through panic, how do we effectively do that? Because the truth of the matter is that this won't be the last time that a panic situation comes up. And so I want to start off with a question to the audience. I mean, when you think about it, what I would ask people is, how do you really define panic? I mean, really think to yourself, like when you think about the word panic, what really comes to mind? I mean, if someone were to ask you, hey, how do you define what panic is? And so as you start to think about that, keep that definition in mind as we kind of make it through, some of the presentation here, because one of my goals is not only to just define panic and identify what causes it, but also to identify some very key things that I have seen to be very effective in helping me be able to partner with different leaders, different executives, partner with CEOs, partner with CFOs, partner with, the COO of Fortune 500 companies, and also to really working with, smaller tech companies, or really partnering with that senior leadership team, partnering with the department heads, and really working through times of panic and times of shock and so forth. So the way I like to define, or I guess you say the way that, the Oxford Dictionary or I guess Google defines, panic, the word I really want to focus on is typically it is, or the words are sudden and uncontrollable, meaning that a lot of times when it comes down to panic is the result not of someone who's sitting and they're just kind of thinking through all the worst case scenarios, and they kind of strategically plan to be worried about something. Typically it is a sudden and uncontrollable response to something, meaning panic really relates to what someone's core beliefs are. I mean, it really does relate to what they intrinsically believe. For example, when I was on a hike once, and out hiking, and as I'm walking through, as we're walking on this hike, someone had warned me before that, hey, you want to make sure that you look out for I guess predator animals and stuff like that. And so as I'm out walking on this hike, I hear kind of in the distance, the cracking of some sticks. So you can tell, okay, something or well, at the time, the only thing that went through my mind was something just stepped on some sticks. And immediately, like I said, that intrinsic, kind of thought that people had kind of warned me about is, hey, you want to look out for predator animals and stuff like that. I mean, immediately, without, I would say, in such a sudden and immediate sense, the first thought that came to my mind is, oh my gosh, it's a bear. Now, immediately I started responding to it. And it's what my responses were definitely uncontrolled, because I wasn't taking time to think through it and realize that, hey, you know what? There really are no bear in this area. The area I was hiking in, no one had ever seen a bear out there. So it was a little bit of it was a bit irrational, but it was, that sudden, uncontrollable response to information that I was just like, I'd heard this before, but I didn't really take the time to really think through, does this even make sense? And a lot of times when it comes down to panic, and as you're partnering with non-finance professionals, it's usually something sudden happens, and without even taking the time to properly think through it or effectively think through it, people just start responding. And that's what starts to generate that panic that people have, is where they just have they receive some information, they have a immediate thought, and it is not in the context of something that they actually take time to think through, and then they just start responding. Well, that is the perfect place for finance and accounting professionals to play a role. Because one of the things that we have the amazing privilege of is that accounting and finance, we can step out of our feelings and we can look at the numbers, we can look at the trends. And if it's a technical accounting thing, there are rules and principles that we can go back to, where we can look at those things and we can come back to a place of, I guess you say, a place of normalcy, or we can come back to a place of really understanding, like, hey, you know what? Let me get grounded in the numbers, the data. Let me get grounded in the principles. And that is exactly one of the big things that is needed to actually help people to kind of work through panic, is being able to think through that and say, hey, you know what? Let's not make rash decisions. Let's look at something objectively to help us navigate this sudden and probably irrational thoughts that have come to mind. And so as I think about that, one of the things that I also want to point out is that, a lot of us are very familiar with the panic of how companies responded and situations that happened throughout 2020. But what we don't realize a lot of times is that panic is not something that just, waits for a global pandemic. Panic is something that we're dealing with on a regular basis. I mean, because when I think back to some of the jobs that I have held, so I started my career in public accounting and audit, and I've had several jobs that throughout those phases. And so when I was in public accounting, one of the challenges that we faced was the 2008 financial crisis. Now, one of my biggest clients was a real estate holding company. And when the 2008 financial crisis hit, there was a lot of panic because there was, you had the collapse of Lehman Brothers, you had the subprime market bubble, and all of these different things that people were getting sudden information. These things, to a lot of people, these things were happening all of a sudden, and immediately people are like, oh my gosh, the bottom is going to fall out. Like, I mean, especially across real estate, where banks were panicking because banks were looking at it and saying, oh my gosh, these people are not going to be able to pay their loans. We're not going to be able to cover the securities, like the valuations of these properties, the valuations of the securities that are backed by these, these mortgages and stuff. All of that is dropping like a rock, and it's dropping quick, and panic was massive. And so one of those things that I learned is that, hey, you know what? Panic can be caused by I guess you would say a global financial crisis. That's one source of panic. And then I moved into working with a company, a Fortune 500 company called Navistar. At the time, they were about $14 billion in revenue. And one of the big things that was going on is there were some EPA regulations that were happening, and they were requiring businesses within that industry to actually meet a stronger EPA standard as far as emissions. And so the company had decided that they were going to go a alternative route to be able to solve that issue. And most of the other companies in the industry, they went one direction, and our company, the company I was working for, they decided to go in a different direction. Well, after nearly hundreds of millions of dollars invested into this strategy, came back to the conclusion that, hey, this strategy that we've chosen is not going to work. Now, at the time, I started off in working in finance and engineering, and then I moved into investor relations. Immediately, the investors were panicking because they were like, from the investors' perspective, you just spent hundreds of millions of dollars into this program, and you're telling us it's not going to work. What is that going to do to your revenues? What is that going to do to the value of your business? What is that going to do to the stock? Like massive changes and massive implications. And everybody just started panicking, and they started really just going for looking at the worst of the worst situation. And on top of that, there were questions about the board members. There were questions about, is the CEO still the right person for the job? So we went through the process of bringing in an interim CEO. Again, sudden changes happening. And at that point, you had internal panic where people were like, okay, all right, with this new CEO, am I still going to keep my job? What's going to happen here? And all of these different things. And then when I worked at that company for a couple of years, moved over to General Electric. And one of the interesting things that happened at General Electric was, I remember it very vividly, where it was it was a Monday morning. I was, getting dressed, and in a couple of weeks, I was supposed to fly over to the UK to actually go visit one of our major suppliers, have some meetings and stuff like that. And I remember Monday morning getting a call, and the person on the other end said, hey, I think you should cancel your trip for the UK. And I'm thinking to myself, like, okay, why? What happened? I mean, part of me, I was looking forward to the trip, but also from a business standpoint, I'm like, okay, all right, what's going on here? This is our major supplier. So what happened? And they told me that in the middle, the night before, there was an issue that happened that is still being investigated, but they had a devastating fire that literally burned the plant down. And I thought to myself, oh wow, sudden news. Now, at this point, I was a finance leader for that part of the business, and I'm thinking to myself, is everyone okay? Like, please tell me that no one was in the building or that everybody was able to get out. And she confirmed. She said, yes, no one was hurt, no one was injured. It happened in the middle of the night, after kind of between the last shift and the first shift coming in the next day. And so I was like, that is great. And then the next thing I thought is, oh my gosh, we are in the middle of a $20 million negotiation with supplying one of our biggest contracts, supplying them with more parts and supplying them, servicing their existing fleet, as well as providing them with more support. And one of the things that I realized is, I was like, okay, all right, we will not be able to get, supply from this supplier probably for, at a minimum, in the very best case, a year before we can actually get more supply in. And so I immediately thought to myself, like, okay, all right, we got to figure this out. Like, what are we going to do? And so, the team and I, we started working through some things. Now, of course, that sudden change really brought on some uncontrolled, or I guess you say irrational thoughts of, oh my gosh, the business is going to go under, all of our customers are going to leave, they're going to be unhappy because we can't get them parts, and all the worst of the worst situations. And really, as a finance leader, it was time for me to step up to really dig in and really figure out how to partner and move through things. And I'll definitely talk about that a little bit more on in some of the examples of what we did to resolve that. And then I moved to a tech company, and there, one of the things that caused panic was, we were growing at a really good pace, and we entered into hyper growth where there was a massive amount of investment. We successfully raised about $65 million in private equity funding to really push and grow the business to the next level. Now, with hyper growth, there comes a lot of different things. I mean, a lot of things are happening suddenly. And if you don't have rational thinking behind it, people can panic when you're going through growth, because there's so much more that has to change. We have to wrap our minds around. And so it's one of those things that I said, panic can happen in so many different forms. It's not just a global pandemic that causes panic. And what accounting and finance professionals really need to understand is that panic is not something that is just limited to a global issue. The people that you're working with, there may be micro decisions that are happening on a regular basis that they are panicked about. And that is a perfect opportunity for you as a finance professional to step up, to step in, and to start to build a stronger partnership with them to help them navigate those stages of panic, because panic is happening more than we realize. So I really want to stop and hit a polling question for people is as you think about it. I mean, this was, something for you to think about, is when you think about your career, as we've talked about it, panic and disruptive events are not just based on global pandemics. But if you think about throughout your career, how many disruptive events have you had to face or have you been a part of? And as you think about that number, one of the things to realize is every one of those panic situations, every one of those panic stages, or every one of those disruptive stages, there was someone or some people that were experiencing a little bit of panic about what that meant. And so next, I really want to spend the rest of the time kind of talking through what are the stages of panic. And then what we'll layer in is what can we do as finance and accounting professionals to really help our counterparts work through those stages. Because to be honest with you, panic is not something that can be immediately overcome, where you can just, kind of in those movie scenes where you see someone that goes into panic and then someone just grabs them and slaps them and then they just somehow they get over it. Like, that's not going to happen in the professional setting. One is you probably should never, ever think about hitting someone. That's just a no. But just the reality of panic is not something that people just immediately get over because you slap them into it. Panic is something that people really do have to work through stages. I mean, there are steps that they have to kind of navigate to really get to the end of it. And to be honest with you, some people get stuck in one stage or another. And it is our job as, as finance professionals who can look at, the numbers, because the numbers allow us to be objective about a situation to where we can look objectively at a situation and we can start to help our counterparts navigate those stages as we're moving through the steps and the stages of panic. So through all of my experiences and through all of the research and asking different business owners and different business leaders about the stages of how they dealt with different situations, these are the 4 common stages that I've seen happen when a disruptive event comes up. These are the 4 common stages that I've seen people work through. I mean, there's definitely your shock and awe stage, your awareness stage, the idea and plans, and then the actions and evaluation. So let's dive into the shock and awe stage. Now, the shock and awe stage is usually, that initial hit that people experience when it comes down to, any type of disruptive event, is just that overwhelming feeling, because when we get unexpected information, we're not always prepared to be able to really properly think through it or internalize it. Again, I go back to that example of when I was hiking. I mean, the shock of hearing, sticks break. I mean, immediately that sent shock waves, or I guess you say immediately, I just didn't know how to process and think through everything. It's just, that's just where you just get overwhelmed with information. Or let's say you're working in a company and, some news comes out of, hey, the company didn't hit its quarterly financial targets. Immediately, shock starts to go through and people start thinking through the what if, because this is definitely the stage where rumors and hearsay really start to grow, and if it can grow like wildfire. And we as professionals in accounting and finance have the ability to look at situations objectively. And what we can do is we can help prepare our counterparts for, hey, how are we going to stay ahead of this to make sure the rumor mill doesn't grow? Because if the rumor mill continues to grow, it's really going to challenge our ability as a business to be effective. So I want to, throw out another polling question, kind of just for our taking time is to step back and think about this. Is, when you think about a major disruptive event, and a major disruptive event has happened, is what I would ask you is, how long does it take your company to start responding to that? And, how long does it really take you, the company is, this disruptive event has happened. How long does it take you to really get the company to actually say something about that? And so as you start to think about that, because like I said, the shock and awe is going to happen anytime in major news. And sometimes the shock and awe can be for good things, to say, hey, we just won a really large deal. Like, hey, we're a $5 million business and we just won a contract for $2 million. Like, there's going to be shock in all of it. And the question becomes is, how long does it take the company to start putting out information and to put out objective thoughts on it? Because you will have to help your people navigate the shock and awe that they're experiencing. The next stage that people really go into is awareness. And the reason why I asked the question about, the how long does it take a company to respond is because in the awareness stages, that's where you start hearing objective feedback or objective thoughts on the news that people just heard. Because like I said, disruptive news and, big wins can be disruptive. big losses or potential, or the fear of potential losses can be disruptions. Where you have a new competitor entering the market, different things can lead to a disruptive event. And as a business, one of the things that you have to do is figure out, how do we get ahead of this to start providing objective information and objective insights to help our people start to really, think rationally through this. Hey, this thing happened. Yes, we know it happened, but hey, here's some information we should start thinking about and considering. And the perfect person to do that is the finance and the accounting professional, because we are well positioned in a place where we are constantly thinking about the objective perspective of what's going on, the objective perspective of what's happening in the business. So we have a huge advantage over other departments within the business to be able to actually help navigate that. So in the awareness stage now, in the awareness stage is where more information, more commentary comes out. Now, there could be a lot of speculation that comes out, and you'll hear more people talking about it. And this is where people have accepted that, hey, this situation is real. And I think back to the 2008 financial crisis. When people heard that Lehman Brothers was going under, a lot of people initially said, no, that's not true. Lehman Brothers has been around for a while. But then once they became a little bit more aware of the reality of it, they started accepting the fact that, hey, this is happening. Like, it is happening. Yes, it's shocking, but it is happening. And that's kind of what happens in the awareness stage. And then the third stage, this is where we really start to see people kind of making a shift in their journey through panic, is where we get into ideas and planning, where people really start to think through, okay, all right, this shocking thing has happened. I got this sudden news. I was shocked and, in awe about it. I'm a little bit more aware. I've come to accept and embrace that it is the reality. It is what's happening. Now, this is where they really start to think through, okay, all right, now what are we going to do about it? And this is the stage that you really, really want people to be at, because when it comes down to, any type of disruptive event, we can sit and we can just wallow in the fear or the speculation of what could happen, or we can embrace the reality that it has happened. And then now we need to focus on, what are we going to do about it? Now, in this stage, this is where the partnership with the finance and the accounting department becomes phenomenally critical. And I will definitely tell you, as people have gone through their stages of panic, as they start to get around this phase, kind of between awareness and idea phase, this is probably the place where they are the most open to partnering with the finance and the accounting department. So this is where we really have the opportunity to shine in a phenomenal and a great way. And so I want to bring another thing into the thought, is a question to think about is, as an accounting and finance professional, or maybe you're a accounting and finance, business owner where you're leading your own firm. The question to ask yourself is, what non-finance teams are you currently partnering with the most, like on a regular basis? When you think about the non-finance teams that you're interacting with and that you're partnering with, which ones are you interacting with the most? And the truth of the matter is that this may change depending on what the situation is. And this may change depending on where the business is or what the subject matter is. For example, if your business is looking at, hey, restructuring, there's going to be some downsizing or some layoffs or some changes in job responsibilities, then you may find yourself spending a lot more time with the HR department. I mean, if you're going through a situation where, hey, there's hyper growth, where, hey, we just won some really major contracts, you might find yourself spending time with the HR department because you got to ramp up hiring. Or you may find yourself dealing with the operations or the engineering team, because we have to figure out a cost-effective way to be able to support this increase in this growth. Or let's say you just got a lot of investment into your business and you just raised capital, or let's say the business just got a new loan, then you may be working with your sales and your marketing team of really figuring out, hey, what is the most productive place to put this money so that we can continue growing the business to deliver. So think about that, is as you think about, where you're spending your time and what department, who are you really spending more of your time with on a day-to-day basis? And then the last stage of, a panic, it really comes down to actions and evaluation. And what happens at this stage is, this is where I think the finance and the accounting department probably shine the most. And to be honest with you, even those that are not very intent on being a business partner, you can still shine in this area. Even if you're working in an organization where they aren't really prepared, they aren't really prepared to bring the finance and the accounting team to be very proactive. Let's say you work in a company where, the non-finance team still want to kind of do their own thing. At this stage, this is definitely still a very phenomenal place for the finance and the accounting team to really dive in and play a major role in the business. Because when it comes down to actions and evaluations, is we've gone through the shock and awe. We've gotten more insight, more awareness. So we've now finally accepted it. Now we're navigating through figuring out the ideas and the plans of what are we going to do next. Now we're in a stage where we've come up with some ideas. We've come up with some plans. Now the question that we're asking ourselves is, okay, all right, how are we going to monitor those plans? And what are we going to be taking action on? And how are we going to monitor and evaluate, were our actions the right actions to take? And this is where you get into reporting. This is where you get into KPIs, different things like that. And this is where I think, even if you're in a organization that doesn't really like the finance department, this is still a stage where the finance department can really step in and partner and really drive home the value of the relationship between the finance and the accounting department. And also really stepping up to say, hey, here's where you need the finance and the accounting department to really play a role, because we are going to be in the best position to be able to look objectively and to provide feedback to say, hey, this thing has happened. We're in shock and awe about it. We kind of navigated through that. But hey, here's what we are going to do about it. Now, before we go on, I want to go back to another thought-provoking question, because the actions and evaluation stage is where we're expected to play the biggest role. It's really when you think about your business, or you think about the teams that you're working with, is how often does your team report KPIs? Because that reporting function is going to be very, very critical of helping your team navigate and kind of partner through a situation, a panic, or being able to help the business get to the next step, or helping the business grow, or helping the business evolve past this disruptive or the shocking event that has just happened. And so if we look at all the stages together, I mean, you have the shock and awe, awareness, ideas and plans and actions. I mean, the shock and awe is just that initial shock factor that hits people when something unexpected or disruptive happens. That awareness stage is as they start to get more information and they really start to embrace the reality that, hey, this has happened. But also in that stage, that's where speculation starts to develop, where people start to kind of draw their own conclusions. And this is probably where I would say it is very, very a prime opportunity for the finance and the accounting professionals to step in to provide value of helping people kind of navigate this phase of, being inundated or getting more information, getting more insight there. And Also, moving into the ideas and the plan stage, you want the ideas to be data driven. You want them to be informed by the data, what the data is saying. And you want that to play a heavy role because the data is going to be objective in this situation. Whereas, in a very disruptive, news or even slightly disruptive, our emotions can lead us down a path that may not be the most productive for us or for the team or for the business. And then moving into the actions and the evaluation stage is something that we really can play a really, really big role and partner in a big way. Now, the question that may be asked is, okay, all right, how do we help our people move from stage to stage? Because as I said in the beginning, when panic happens, it's not something that, you're going to be able to grab people and slap them out of it. There are stages and there's a process that people have to really work through getting through a situation of panic. Now, some people may work through these faster than others, but as a whole, the reality is we're all working through, in general, kind of these four stages are kind of what we tend to work through and really getting from, the panic of a disruptive event to getting back to being productive and effective in what we do. And finance is perfect for helping our non-finance counterparts actually navigate that. So, how do you get them from shock and get them prepared to go into awareness? Now, when disruptive news comes out, people may be shocked and they may be considering like, hey, what does this mean? Or, hey, or did this really happen? And in that stage, that is where communication becomes very, very critical. Now, going back to the example of when, I got the call from one of my major suppliers when I worked at General Electric they had a devastating fire in one of their plants. One of the things that we had to think through is, as I got with the rest of the leaders, is, okay, Art, what is going to be our messaging? Like, how are we going to share this with the team? What are we going to say to the team? Like, because we need to provide them with some kind of information, because what we don't want is, we didn't want them just going online and finding out about it and then, us losing credibility with the team. And we also didn't want them to, have to worry about things like some of the same things we worried about was, hey, was there anyone hurt? Because some of them knew the people that worked at, for one of our vendors. So one of the things that we realize is, hey, we need to get ahead of this and we need to make sure that we start communicating as leaders to provide context around, hey, what happened? And also to answer some of those questions that they might not be able to find out online. Like one of the most important questions that a lot of people asked was, hey, is everyone okay? Was anyone hurt? And to be honest, you could have looked online and found an article online, but it didn't answer that important question. So us being able to step up and provide that communication and deciding, who do we communicate it? Do we communicate just to the managers and then let the managers recommunicate? Do we communicate to everyone? Is, as you kind of work through disruptive events, one of the first things that you can do to help your people navigate from shock and awe into the next stage is being able to give them effective communication. Now, also, one thing that a lot of people usually forget about, and when disruptive events happen, they have this big all hands, or they have this communicate, or hey, a new tax law came out, you hop on the call with your clients and you're explaining, hey, giving them information on this, is making sure that we're listening for feedback, because that is very, very, very critical. It's one thing to communicate information to people. I mean, even in just, the normal, let's say, if you need to communicate financial information to your clients, or financial information to your non-finance team, it's making sure that we're not just focused on getting our message out, but making sure that we are paying attention to, okay, how is this information impacting them? Hey, what types of questions are they asking? What types of follow-ups? Like, how are they responding to the communication that is being given? And then also being intentional about creating an opportunity for people to come back and ask more questions, or creating the opportunity for them to be able to give their feedback and their input. Because as we're focused as leaders of how do we really help them go from the shock and awe stage into awareness, communication is not just something where we just inundate them with information. It's creating a open loop of we're providing information as well as receiving feedback and insight from them, so we know how to continually tailor the message to best help the people that we're trying to partner with. Now, the next stage is the awareness. And the question of is, how do you get people from the stage of awareness into ideas and plans? And data analysis and modeling is probably one of the best things that we can do in that stage. And so, as you're thinking about data analysis, and it's really where, hey, people have accepted that, hey, this has happened. Now, in this stage of awareness, a lot of speculation can come into play. And this is where we can dive in to objectively look at the numbers, the data that we have access to, and we can start to actually really help navigate. Because when a disruptive event happens, for example, when I was working and the company had to announce that that we had to change our product strategy because we couldn't meet the EPA requirements, the way we were going about it is there was a ton of questions that came out. Investors were asking questions. The board was asking questions. Employees were asking questions. Different departments were asking questions. Customers and vendors were asking questions. And one of the things that we could do is really start to dig into the data and just say, okay, all right, based on the data that we have, here's what some of the outcomes could look like. And where we get into aggressive modeling of really starting to lay out some of the scenarios, because as people start to think about, hey, well, what ideas are next? We as accounting and finance professionals have to be prepared to give them feedback to say, hey, if we go that route, here's a potential outcome that we can expect. Or, hey, if we make this decision, here's a potential outcome that we can expect. Now, to be able to do that, we have to have our tools and we have to have some kind of insight on what the drivers or what the correlations are between, two different data points or multiple data points. And that is where we can start to get ourselves in position to be able to provide that level of insight and objective feedback. So I want to take another look at a different approach on something that we as finance and accounting professionals should think about is when you think about, the models and the financial models that you design, it's, how many different scenarios do you build into your model? Like on a normal basis, how many different scenarios are you building your model for? Like, does your model have the ability to look at, to easily change the different types of scenarios, or are you building static models? Because the most helpful thing of navigating disruptive stages is really being able to build agile models that have the ability to change a factor here, change a factor there, and to really start to see, hey, what could the outlook be if this happened? What could the outlook be if this happened? And as we continue to navigate that and really work through that, I would say agile models are probably one of the best tools to really help your people go from awareness of, hey, they've accepted that this has happened, to actually getting into effective ideas and plans. Now, once you reach the stage of ideas and plans, the next question is, how do we get people into the stage of taking action and evaluation? And at this point, this is where leadership really, really comes to bear. Because at this point, you have to provide direction and you have to make decisions. One of the worst things that we can do during a time of panic is to sit back and try to let the situation work itself out. Because oftentimes what we don't realize is that, in any situation of panic, there are a lot of decisions that need to be made. And what we have to be able to do is we have to be able to work with our non-finance counterparts and really help drive the team to clarifying what direction are we going to go in. Like, yes, we went through the shock of, hey, this happened, we accepted it at awareness. Now we've come up with some ideas and some plans. Now we need to pick a direction, and we need to make some clear decisions on how are we going to actually move forward, or what ideas do we move forward with, what plans do we move forward with. Like, we have to provide direction, and we have to make decisions, because if we don't step up to really provide direction to our teams and actually help really aid that process of making decisions, what's going to happen is our team is going to stay in this state of constantly coming up with ideas and constantly coming up with new plans, but we'll never move to the point of actually taking action and being able to evaluate it. Now, the decision is very, very critical for the next stage, because if you're going to tell your team that they need to go take XYZ action, you need to be able to provide them with, hey, some directional context. And as finance and accounting professionals, we have a great opportunity to do that, because we can look at the objective numbers and we can look at the insight and we can point them in a direction to say, hey, based on what we've observed, here's a good direction that we can head in, and here are some decisions that we can make. Which brings us into the actions and the evaluation. And the question is, how do we effectively navigate the actions and the evaluations? The truth of the matter is, reporting is the key of being able to say, okay, all right, based on the decisions that we made and the direction that we're going in, what are the KPIs? What are the metrics? What is the frequency that we're going to report on these things? Like, what are we going to measure to tell, are we headed in the right direction? Are things going well? And as we look at what we are measuring, is really asking ourselves, okay, all right, does this provide the right context that people need to know, is this the right direction? Are we going down the right path? Am I being effective, or are we being productive in what we're doing? And then we also need to be able to figure out, how often are we going to be able to report this? And how often are we going to be able to communicate these numbers and communicate this information? Because it's one thing to be able to track this information and be like, and say, hey, we're tracking, we're keeping an eye on it. But if we're not communicating that information back to the team or back to the people, then we could be running into a very serious issue of spending time doing great analysis, but it not leading to a great result. So we definitely want to make sure that we have both, that we identify the metrics and what we need to measure, but we also want to have a cadence for reporting. Now, I want to stop and one more I guess say thought to think or to consider is, when it comes down to the metrics and the reporting, is really, how many metrics are you really monitoring with your team? And what I would think about with that is, what's the right mix? Like, are you measuring enough metrics? Are you measuring the right thing? Or are you measuring too many things that the team can't focus on? And then, because that's where, as a finance and accounting professional, we play a very, very big role in being able to help our counterparts be able to navigate and be able to understand, that is, what do we need to measure? Like, how many different metrics do we need to measure to make sure the team is headed in the right direction? So when you stack all this together, like I said, when a disruptive event comes, panic is a very likely reality. But one of the things that we can do to help our people not stay in a state of panic is helping them navigate the stages. And those stages start with shock and awe of, hey, this thing just happened. I can't believe it happened. Like, I'm still in disbelief that this has happened. Well, as we start to provide communication and help with a little bit of understanding of what's going on, people can navigate from shock and awe into the state of awareness where they've accepted what has happened, and now they're processing it. But also during that stage is where speculations can definitely start, and it could lead people down the wrong path. But that is where we as accounting and finance professionals can provide insight from the data analysis and really prepping the modeling, because we're going to play a big role in really helping people take all this communication and this data that we have access to and the circumstance and the situation to really start narrowing it down on, hey, here are some of the ideas and the plans that we have to be able to respond to the situation that we find ourselves in. And our models are really going to help people start to understand, hey, if we go left, here's the potential outcome. If we go right, here's another outcome. And speaking for an example of back to when I was working as a finance leader, and our vendor had a devastating fire, and it really impacted our ability to be able to deliver to our customers. In that awareness stage, what we started doing is really digging in and analyzing and saying, okay, all right, if we aren't able to renew this contract, what does it do to our business? If we're able to deliver partial of this contract, what does that do to our business? And really setting up the model so we can think through those things. So then when we stepped into ideas and plan stage, what we realized is we weren't going to be able to get supply from our vendor. It would take them a minimum of 12 months to get back up and running and to get the supply chain moving again. So one of the things, some of the ideas we thought about is, well, we've sold spare parts to our customers in the past. What if we were able to come up with financing arrangements where we buy that excess supply back from them, and that way we can manage reselling it to the customers that needed it immediately. And what we could then do is start, refurbishing and repairing some of the used parts so that we can still be able to support our customers while the supply chain was up and running. Now, a lot of that required us to do some very creative pricing arrangements, or to come up with some different legal arrangements or commitments with our suppliers, which impact cash flow, which impact profit. And a lot of that was where we had to establish the models to be able to help the operations team understand, hey, well, this is what it means for staffing, and this is what it means for, hey, the supplies that we need to be able to refit or be able to refurbish existing products. And then also working with the sales team of, hey, here's what pricing models need to look like. If we go with this strategy, here's the potential outcome. If we go with that strategy, here's the potential outcome on that. And the models really help the team get to a point of being able to see enough, clarity to be able to make a decision where we were able to come to a conclusion and say, hey, based on all that we understand, here's the decision we're going to make. And after we made that decision, we now had enough to communicate to the rest of the team on, hey, here's the actions that we are going to take moving forward. And here are the metrics that we are going to continually monitor so we know that we're headed in the right direction. And as you think about, your role as an accounting and a finance professional, one of the greatest things that you can do whenever a disruptive event happens, whether it's a big or a small disruptive event, is we are in the perfect place to be able to implement these things on the bottom of this chart, because the things on the bottom of this chart are what allow us to be the best partners to our non-finance team to help them navigate the journey of panic so that we can stay an effective and an efficient business in spite of all that we're going through. Thanks for tuning in. Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.